Hello and welcome to Market Guru. Joining us today is Nandita Parker from Karma Capital. Nandita, morning. Good to have you on the show. Now I'm just going through the transcript of your last interview, and you did mention that the couple of big negatives for Indian markets were the excessive tightening by the Reserve Bank of India and what was happening in Europe. And looks like both of them have turned around at the start of this new year. In line with what you expected. What's your call now? I mean, after having seen the rally of 25-30% already, do you think there's scope for much more rally given what has happened in 2011?
Yes, I do believe so. I think that one of the key things from my standpoint is that we are in a 5-year bull market for as far as emerging markets are concerned. And this year, especially, we have a backdrop of falling interest rates across emerging markets as well as India. So falling interest rates tend to be very supportive of equities. So we have that support as well. If you look at where valuations are currently in India, vis-a-vis the 10-year average, we still have a long ways to go. And I tend to look at price to book because that cuts out a lot of the noise versus other valuation measures. So if you look on a price to book basis, we've put in a very credible low in December. Our 10-year average is about 3.29 on the Nifty. We're currently at about 2.8. Even if you X out all of the excess high data points from, let's say, 2007, your average price to book would be about 3. So if you have a 2-year time frame, and I think we still have 2 years of bull market left, we are looking at a target which is about, just to revert to the mean, about 45% higher from current levels, which takes you to a Nifty level of about 7950. Now, typically, whenever bull markets end, they don't end at their mean. They actually go higher. So I would say that there is lots of room from an upside perspective.
Nandita, I have to say that's the most bullish statement I have got. Even though the market has been quite bullish, but 7950 on the Nifty with an upside potential from that is going to be quite something. So if that's your call, then would you say that in hindsight, last year was not essentially a bear market, but was just a very sharp and vicious bear market correction? And if at all we see something like this again, that should be used as, again, an entry opportunity?
I would agree with you. I do believe that we had a correction last year. It's very typical in the third year of a 5-year expansion cycle. And now we're going to be, climbing up the staircase again. So this is definitely, a market which is underpinned from a valuation perspective. I think it's time to be an investor in the market rather than a trader and a speculator. I think that's what's going to work going forward. And I think that, I had also said that people should start investing in equities from a longer-term perspective, and I would encourage them to do that right now in India. Remember, this target that I have is a 2-year target. This is not, a short-term target.
No, fair enough. That still that 8,000 target would imply another 30% or more upside if you believe that we are going to overshoot. The general point which the retail investors would want to know is, even if you are investing in long term, then what pockets of market do you think are going to outperform? We've already seen a big rally in banking stocks. We've already seen a big rally in some of the capital goods and infrastructure stocks. We've already seen a big rally in auto stocks. So what next? Or is it that these sectors are going to continue to lead the market rally?
We tend to be very much stock specific, but I must say that financials are looking very good because we have seen everything that was possibly negative thrown at the sector in the past 1 year. So they have a lot of catching up to do just to get back to where they should be trading. So there's a lot more room in financials. We are positive on private sector banks. We're positive on infrastructure, finance companies, as well as some of the public sector banks. So I think this one is very clear cut. Also in the auto space, we're positive on Maruti. Cab goods, have rallied in expectation of a turn in the investment cycle. And I think we're at the early stages of that. As it plays out in the year, we will see probably a massive expansion in multiples. And so I guess there would be room for upside there as well.
Now that's an interesting call on Maruti, and it's turned the corner quite clearly from last year when it had all sort of problems. But do you think it can continue to outperform, and vis-a-vis say maybe two-wheeler stocks, would a stock like Maruti continue to be a better investment bet going forward?
Well, I must admit that I do own Hero Motors as well, and I do have Bajaj as part of my diversified portfolio. Actually, we own Bajaj Holdings, which is at a deep discount to its intrinsic value. So we have a fair amount of representation of the auto space. We're generally bullish on this space, from a consumption story standpoint as well as falling interest rates.
Nandita, let's talk about the banking names. You did say that you prefer PSU banks. SBI has seen quite a bit of rally already, and to be fair, the asset quality issues haven't really gone away. In fact, in the last quarter also, the NPAs quarter on quarter went up much sharper than what the market expected. This whole issue of Kingfisher and a couple of other aviation companies as well. What makes you so bullish on the PSU banks then?
As I said, I'm not generally bullish on PSU banks. I'm bullish on some select ones. But anyway, putting that aside, the thing with the banking space and asset quality is I think that we are at the tail end of this cycle, and which means that probably in another quarter or two, a lot of these troubles will be behind us and we will have provided for. I don't own SBI. But I do own Bank of Baroda, which has a much better asset quality book. So, but regardless of that, I think we have to start looking beyond the past cycle into the future. And I think that's the transition the market is having trouble making right now. And as we see that play out, this moment will be sort of a learning moment for everybody.
Nandita, the other sector which has been so good this year is capital goods and infrastructure, and this is such a vast sector. You have a variety of stocks over here. Would you back a stock like maybe L&T, BHEL, or would you go down to some of the mid-cap ones which had a massive correction because of balance sheet issues in 2011, the likes of a GMR, Lanco, all the airport companies or port companies, or some of the road companies? Would you back that part of the market since your approach is stock specific?
Right. Well, I'm positive on both L&T and BHEL. I think that there's clearly lots of room for both of them here.
And what about some of the other asset owners?
I think that the infrastructure spending story still needs to play out. When we're talking about $1 trillion spend on infrastructure over the next 5 years, I mean, it's very clear who's going to benefit. So, I would be stock specific, and within this, I do like the two large cap names.
Nandita, what's your expectation from budget on Friday? I mean, do you think this is going to be a big event for the market, and something could be done that could lead to this market rally getting accentuated, or do you think it has the potential to actually derail the current rally?
I'm not very short term in my focus, so I don't think I can answer that. But I'll tell you what my expectations are from what the finance minister will do. Firstly, I think he will put us on and provide a very clear roadmap for fiscal consolidation. I don't think there are any two ways about that. Secondly, there will be a push to simplify the tax structure. And the simplification of the tax structure is a key event to stimulate investment in India going forward. So those are the two things that I'm looking for. And thirdly, we should see much more policy clarity on something that has already been announced, which is the national manufacturing policy. I think that this is also very important from the standpoint of job creation. If this government doesn't focus on job creation, then India's demographic dividend will become an albatross around the neck of the government. So these, to me, are the clear, important steps broadly that the government needs to talk about in this budget or in this session. So I'm quite hopeful that we will see it. At this point, it's an imperative. I don't think there is any choice left in the matter.
Nandita, since you said that your approach is really long-term, and in that case, what's the big risk for the market? Do you think crude prices remain the single biggest risk for the market? Because, while in 2011 also we had quite a bit of correction, one asset class which never really budged was crude. And now we are at a scenario where Brent is back to 130 or so. The Indian crude basket is at an all-time high, even higher than what we saw in 2007, 2008. Do you think that remains the single biggest risk for the market?
Look, it's out there, and I think the bigger risk is that we don't pass on the price increases to consumers. I think it's really important for people's consumption habits to adjust to higher fuel prices. And that in itself provides a negative feedback loop to crude. So we need to stop subsidizing fuel in India. And I think, it's a negative in that they're rising. I think that, the Iran factor, now that the powers that be are trying diplomacy as opposed to confrontation, is very important, and would probably provide a way to subdue crude prices. But even if they don't, and if they sort of stay flat at these levels, we do need to make an adjustment to fuel prices in the country.
Nandita, do you hold?
I think if you talk to people on the road, what's very clear is that people don't mind paying more. They want the government to spend more on infrastructure. They want, the facilities to be there. They don't mind spending more, whether it's the rails or whether it's cars. So I think that people will make an adjustment.